Welcome to The Explainer. Today we're diving into a fascinating argument, one that says a huge market crash, which sounds like absolutely terrible news, was actually a secret signal, a starting gun for a massive price surge in one of the world's most critical commodities, silver. So, our story kicks off on Christmas Day 2025. And while most of us were with family, China's only pure silver investment fund took a nosedive. It dropped a full 10% in a single day. Now that's the maximum allowed before the circuit breakers kick in and halt all trading. It looked like pure panic. You know, a 10% crash? That sounds like game over for silver investors, right? Well, the analysis we're examining today argues the complete opposite. It claims this crash was actually the starting gun for a gigantic price surge. So how on earth can a crash signal a boom? Well, let's unpack this.
To really get our heads around this argument, we have to start by looking at the very strange way investors were behaving right before this crash happened. It's not what you'd expect to see at all.
This quote really just says it all. The analysis suggests that right before the crash, these big, savvy investors weren't just excited about silver, they were desperate. They were scrambling to buy it, racing against a clock that was about to run out. And you can actually see that desperation in the numbers. The price these folks were willing to pay, well, that's the key to understanding this entire argument. The clues are right there in the price tag. Okay, get this. At its peak, just before everything fell apart, investors were paying a staggering 62% more than the actual silver in the fund was even worth. I mean, this wasn't some tiny markup. This was a massive flashing red light.
Think about what that means for a second. You're knowingly paying over $1.60 for something that's only worth $1 right now. According to the source, the only reason you'd ever do that is if you believe the price isn't just gonna go up, but that it's gonna go up so much, so fast, that it will soar right past that 62% premium you just paid.
And this wasn't just happening with paper investments. At the exact same time, physical silver was literally being drained from the warehouses in Shanghai at a record-breaking pace. In just 2 weeks, 43% of the entire inventory was pulled out. The actual metal was vanishing. So what in the world was causing all this panic? Why the huge premium? And why the mad dash to get physical silver out of the warehouses? The source points to one single thing, a government deadline that was approaching fast, and it was set to change everything. Back in late October of 2025, China's government announced some brand new export rules. Starting January 1st, if you wanted to export any silver, you'd need a government license. And here's the kicker. China refines an estimated 60 to 70% of the world's silver. This move basically gave them an on-off switch for the global supply.
And this created an unbelievable time crunch. The rules were announced in late October, sure, but the deadline to even apply for one of these export licenses had already passed by mid-November. So by Christmas Day, the new system was just days away from turning off the tap. The clock was ticking.
Hey, if you're finding this explainer useful, we'd really appreciate it if you took a quick second to like, share, and subscribe. That way, you won't miss any of our future updates.
All right, let's zoom out to the global picture for a minute, because China's big move wasn't happening in a vacuum. Nope, it was happening at a time when the world's silver supply was already under enormous pressure. According to this analysis, for 5 years straight, the world has been using way more silver than it mines. This has created a massive supply deficit. We're talking over 800 million ounces have been drained from global stockpiles. To put that into perspective for you, that's nearly an entire year's worth of global mine production, just gone. And this supply problem is colliding head-on with exploding demand from all our modern industries. I mean, silver is absolutely essential for solar panels, electric vehicles, and AI data centers. In a lot of these technologies, there's just no substitute for it, and the demand is permanent and growing like crazy. Now, you might be thinking, well, won't higher prices just get miners to dig up more silver? And, that's a fair question. But the source argues it's not that simple. It can take 5 to 8 years to get a new silver mine up and running. Supply can't just be turned on like a faucet to meet this sudden surge in demand.
So, let's recap. You've got global stockpiles that are drained, industrial demand that's soaring, and the world's biggest supplier about to slam the door on its exports. The source argues that this perfect storm can only lead to one outcome for the price of silver.
The source actually lays out a possible 30-day timeline. It suggests that in the first week of January, as confusion takes over, the price will start to climb. Then, by mid-month, as the market realizes Chinese silver is truly locked up, it'll jump again. And by the end of January, as the first news reports of industrial shortages start to hit, the price could very well test that $100 mark.
And here's another piece of the puzzle: silver's relationship to gold. You can kind of think of it like a currency exchange rate. For the last 50 years, on average, 1 ounce of gold has been worth about 52 ounces of silver. But right before this crash, it took over 80 ounces of silver to buy 1 ounce of gold. That makes silver look really, really cheap by historical standards. The analysis suggests that if that relationship just goes back to normal, the silver price would have to rise significantly, and that's before you even factor in this massive supply shock.
And the source makes a really crucial point here. This isn't like some of the market events we've seen in the past that were caused by speculators. It argues this is a fundamental long-term restructuring. This squeeze doesn't end until the price gets so high that it either destroys demand for things like solar panels or until brand new mines can finally come online 5 to 8 years from now.
So, the argument we've looked at today presents the Christmas Day crash not as a disaster, but as the final loud warning shot. It's making the case that this perfect storm of soaring demand, drained stockpiles, and a new export lockdown from the world's biggest supplier isn't just some temporary event, but a permanent repricing of silver. The question isn't if things will change, but how quickly.